Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. We are the original recyclers. No suits required, just guts and hard work. Here is your host, Brett Eckhart.
All right, we're back. Another episode of Bulls versus Bears. I'm gonna shy away from just hiding over in the corner this month. I don't know that the Bulls have much legs to stand on going into June, but we're gonna give her hell. Back here with Chad, and Chad's gonna make a case why he should be able to buy scrap cheaper this month than he did last month. So here we go. Good to see you, Chad.
I see. Yeah, good to see you. I see you setting the stage. Your LinkedIn. Look at all this prepared scrap. You know, and look all this unprepared. It's all gonna go away because prices are going down.
Hey man, at the end of the day, I just go by what I see, right? I look at the pile. I'm like, I got a few tons I got to move in June. After that, I'm looking at what's gonna come through the system, and I'm like, fuck, I bet good thing I got in the tire business because there ain't no fucking scrap out there, you know.
Turn the faucet off. Scrap ain't moving in June. Write it in the book.
We're gonna just shred some tires, you know.
Oh, I love it.
How you doing, man? Good to see you again.
Yeah, good to see you. I feel like I've been wrong. I feel like everybody's been wrong in this market through the Ukraine-Russian deal. I've talked to guys that were really, really good in the market, and even they're saying I don't have a crystal ball anymore, right? It's broken. And I feel like the mindset of the scrap dealer or the steel mill, that's always a big aspect. But really, when the market was running up, the mindset of the scrap dealer was really, really important. And today, I feel like with the overall market being down, the settlement about inflation, the actual stock market taking a big hit, right? Mm-hmm. We're starting to see slowing on the purchasing metrics and on GDP. So where is your mindset at? I mean, do you feel, oh man, this is just short-lived, we'll bounce right back, or what are your thoughts?
I think I get a couple thoughts. First of all, like you said last month, China is the 800-pound gorilla, and that's never been more true than it is today. Their ability or inability or whatever to get that economy fired back up, their willingness to throw money at the problem or whatever that's going to look like, I think is going to be a key metric, moving forward for at least what the export market looks like, demand side looks like. That being said, you can see the whole Russia-Ukraine deal. I mean, it's still dragging on. And I don't know that plays as much of a role as it might have people really anticipated on the scrap side. Food side's a whole different deal. That's something that people are really going to have to keep an eye on. Yeah. Scrap side, it's not as big of a deal right now. At least doesn't feel like it was when thing very first kicked off. Yeah. Inflation side, economy's slowing. I mean, it feels like that it's, the economy is going to take a break. That's what it feels like to me. How big and how long of a break, I don't know. I mean, this last week, I mean, you saw the stock market come ripping back people, and that could just be a bear market rally, or, people are like, okay, they're going to stop these, half point raises once they get to September, October, or whatever, they've been talking about. And I don't know, I don't have all the answers, but I feel like it's probably smart to make sure you've got a little liquidity in the system and get yourself ready in case it does last longer than I kind of think it will. But
well, on the overall market, it sure does feel like this rally this week. Is that really a rally? Or is it just a dead cat bounce? There's the volumes associated with this quote unquote rally are weak. So yeah, I would, if I had a vote today, I'd be more on the dead cat bounce than I would just say this. We have a new lower low and we're going to turn around here, but time will tell.
I feel like it never hurts to have, be liquid, to a certain extent, especially if you feel like the market's going to get choppy on you. But I also feel some sort of confidence in the fact that if you're going to be in anything, if you're going to hold anything, holding commodities at this point in the game, there's worse things you could be holding, right? I mean, I wouldn't want to be a guy that's a home builder and trying to now I got to liquidate 30 houses or
Yeah.
whatever. I feel like that deal is going to, tighten up real quick. There's a few other, choice investments. I'm not a big stock market guy, so I don't live and breathe that world. I pay attention because I think it has, it plays a big role in what we do, but I don't get too worked up about stocks, other than just paying attention to what's going on.
Well, you talked about China, and that's one thing. I'll share a chart here.
Love it.
And so can you see the steel rebar chart?
Yes, sir.
All right. So, I mean, this one, like we talked about last month, they turned the spigot off, right? We're seeing that in the base metals world. Now, when they turn this back on, right now, I mean, you could say, okay, we've dropped a lot. I think month over month, they're down 9%. Okay.
Yeah.
So with that being said, whenever they stop, I'm watching. I think on the bullish side, if I had to admit one, there would be, if I don't know if this is in June or July or in August, but whenever the COVID thing stops in China and they go back, I mean, they're down, I think 10% on production year over year. So it's significant, right? So whenever they turn the game back on, I feel like that's going to change base metal prices, non-ferrous prices, and that could potentially change the mindsets of us, of the typical steel mill or scrap vendor in the U.S.
Yeah. The other thing to take into consideration too, Chad, is, the dollar at a 20-year high compared to, whether it's the Japanese yen or or against the euro, or I mean, even the Canadian currency for that matter, right? Like,
Yeah.
I mean, when the dollar is this strong, I mean, it has some good. I mean, there's some good things if you're on the import side. If you're importing, you're buying, then yeah, it's good to have a strong dollar, right? But if you're live and die in the commodities business, especially commodities that are traditionally exported heavily, like scrap, then it's not good. That's not good for the scrap dealer, right? Because all of a sudden now these other countries that are big importers, big consumers, they're able to go find cheaper scrap other places and able to, buy it cheaper than they would be able to buy it from anywhere in the U.S. So that basically takes that player out of the market, and you're faced to deal with your domestic steel mills. And what does their consumption picture look like? What's their risk appetite look like? And you start going down that road, you're dealing with publicly traded companies, big conglomerates who are very risk averse and who are like, yep, we'll just take the price down and we'll live with it. And if it comes roaring back next month, we'll figure it out then. But it's like, usually 1-2 months, the outlook isn't very far. It's like, protect the house of cards today.
I love it. You're just walking right into all my bearish points. This is great.
Yeah. So I get it. I try and see it from both sides, but I think the price of scrap should be up in June.
So let's talk about one of the things that the U.S. does import, right? Pig iron. Yeah. And so, like, if you're looking here, you're going, geez, pig iron is down $87 a ton. That's 13%. Yep. Usually I don't talk about percentages, but I do think this is an odd month, right? So I was looking at this and like, man, down 13%. Okay, they're down. Like Russia's pig supposedly like in the 600s already, right? Yeah. Obviously, India changed their tariffs on their exporting of pig iron, so that changes some things, right? So you could see some basing here. I don't think of that, but there's a chance, right? With our Section 232, we really are in our own little island. Mm-hmm. And when you think about, so I'm thinking about that, and then you look at demand, right? It hasn't fallen off yet. Like it's still month over month, it's almost identical. Right around that 81%, 82%. But this chart is not identical. So this is the one I think is the true driver. And so if you look at hot roll month over month, what did we do? We went from 1382 down to 1200. That's 13%. Yeah. So I'm going, okay, let's just say scrap's $500, right? Just generically speaking, what's 13% of that? Oh, it's kind of that.
Yeah.
you know,
another 70, another $70, give or take, right?
Yeah. So that it's funny to me that, you know, you're seeing in publications like the AMM, like, you know, we're down 50 to 70, and you start looking down these metrics, you're like, oh, pig iron's down 13%. Oh, hot roll's down 13%. Oh, you know, China's rebar is down 9%. So you start putting the dots together, and you can at least come up with, okay, I could see that would be the initial talk, right?
Well, but my thing is I want to go back to like rough historical margins, right? Like, yeah, okay, it's come off 13%. Like that's, you know, you're on the new steel side, that's XYZ price. But what is screwed up, and this is why I think there's such a distaste a lot of times from scrap guys to domestic steel mills is, and I get it. I mean, there's no need to pay any more than you got to pay for the iron, right?
Right.
But if they're basing their purchase price off loaded ship price off the coast, right? Not necessarily what their fucking margin is for what they're selling their new steel for, whether it's rebar, coil, beam, OCTG, whatever it is, right?
Yeah.
So they're like, well, hey, the price loaded ship is, you know, fucking $450. Like that's what it is. Like that's what we're paying. And you're like, well, can I get a price quote for like what's the hot roll coil price today? You know, like what was it like last time scrap was $400? You know, and you start looking at it that way, and you're like, how much fucking money is in it? Like how much money do you have to make to like to take care of your domestic suppliers, right?
And it's like you don't buy any scrap at all. You have no idea what it's like to buy scrap at your competitor's shipping point, right?
Yeah, exactly. Well, hey, and this is why I'm saying like I understand it. It doesn't mean that you don't get frustrated with it. Like, I get it. It's like politics, right? Like I'm not big on politics, but I understand why politics are what they are. I understand why Joe Biden wants to give every student loan holder $10,000 right before midterm elections. Like, I'm not saying that like hey, I'm not saying I'm trying to buy votes or not, but I mean, shit, I was born at night. It just wasn't last night. And I guess my thing is you can say, yeah, the price of coils off this month, you know, hot roll coils off this much or whatever. So we got to take scrap down that much. And you're like, you don't have to. Right. You just know you can because there's no other good option for it, the dealer. So you might as well, right? Well,
I think playing into that, I think the market has been really regional. You know, I think there's discrepancies in pricing, $20-$40, which is usually it's 10, maybe 20 across the US, so I think that's abnormal. And I think it's really grade by grade. So when I look at the market, I'm like, oh man, there's a lot of heavy melt, a lot of PNS in most markets, right? But shredded and primes might be a different story, you know? So it's like, how is that gonna change? And we already have these, like you said, the big margins on the steel. We have these deltas between prime and cut grades that are wacky. So there's not a whole lot of normalcy in today's market.
No, and like you said, it's super regional. Are you shipping to the West Coast? Are you shipping to the East Coast? Are you shipping to the South? Are you shipping to the Midwest? Do you even have access to any good export, you know, capabilities? Or, you know, it's very regional. It's very, you know, depends on what your it depends on what your logistics capabilities are. I mean, realistically, right? Like
I was hoping you're gonna bring that up. That's one thing good about downward scrap pricing: less scrap moving, better performance at the steel mill.
Exactly. Well, at the end of the day, I've talked to a couple steel mills now. Everybody feels like they've got a decent amount of inventory, right, on the scrap side. So it may take like a few months to chew through that shit. But if we drop the price on our end, I mean, like I was telling somebody earlier today, I said, hey, $6 diesel, right? We're knocking on the door. It's coming. I mean, if you ain't there, you're real close right now, right?
Yeah.
So $6 diesel and $500 iron ain't a bad thing. $6 diesel and fucking $300 iron, it's a very different game, right? Like at some point you're gonna be like, I mean, hey, what can you even pay for it on the inbound side, knowing that you got to process it and ship it? And so at that point, it's like, even on the scrap processor side, like your inbound price, your purchase price is going to have to be lower than say in the past with $2 diesel.
Yeah.
So you got to kind of figure out what that number is. And then what is that going to do to actual like volumes? In the short term, right now, most yards probably, depending on their logistics situation, have probably a decent pile of prepared material, whether you're a shredder and you've got finished shred, or you're a steel mill and you've got, a pretty good inventory. But at some point, as long as your consumption rates hang fairly close to where they were last year or within reason, you're going to chew through that scrap, right?
Yeah.
And then what's the replacement cost going to be? And I think that's the bullish side of me saying, I'll give you June. Fuck, you can have July. But at some point, if the demand stays reasonable, then you're going to have to come talk to me come August, Well,
I think we don't live in a bubble, right? And I think if you're a steel service center today, you probably have some higher cost inventory, and you want to get rid of that. And so yes, utilization rates are flat, but I think lead times, looking at lead times, right? We're slowing down here month over month. So there's no doubt that until I feel like I'll take my bear hat off as soon as hot roll levels out, at least stabilizes.
Yeah.
Is my
and I think ultimately, it's your job to buy the scrap at as good a price as you can and still keep the customer, right? Without pissing them all the way off, It's my job to sell it as high as I can and not taint the relationship by telling you to go pound sand. Yeah. So it's there's that middle ground in there somewhere. But as long as the export market doesn't exist, as a scrap dealer, you're beholden to the steel mill. And this is going all the way back to 2020, it feels like, right? Where the export market just it wasn't even an option.
Well, you're talking $600 billets, Russian billets, and $750 rebar in Turkey, and then you're talking $1,200 hot roll in the U.S. It's just we're on an island in the U.S. and obviously the Section 232 is keeping us on that island, but at some point, I don't know. It feels like, gosh, what a different world we live in than 3, 4, 5 years ago when these tariffs really didn't exist. The global trade was really wide open versus now. Yeah,
which good job for the steel mill lobby to get that deal done, and you got for all the good things or whatever that Trump did or didn't do, whatever, depends on your outlook, right? One thing's for sure, the tariffs have played a significant role into the domestic steel mill's ability to keep material here at a good price.
Steel stocks haven't gone up at all, right?
No. And you know what? At the end of the day, on the scrap side, if you haven't made money in the last 2 years, you probably should get in another business, another industry. If you, at some point you should say, hey, you're going to have to take your lumps at some point, right?
Yeah.
Do I necessarily think the lumps are necessary? I don't know. I guess it depends on the day. Depends on when you ask me. If you ask me at 5 o'clock on a Friday, if I've had after I've had a couple beers, I might be a little more forgiving.
Well, I feel like when the steel mill, I remember I learned that very, very early in my career. The steel mill was not doing well. That's the time I was working for a large steel mill. And one of the scrap vendors told me, hey, when you're not making money being the large steel mill, I'm not making money. When you're making money, I'm making money. So it's not me versus you. This is a we in the whole industry, right? So
there's, like I said, it's like walking that fine line in there to where, you're buying it where you're making good money, but you're able to pay me enough that I can, make good money, right?
Yeah.
I think that's when everybody's winning. That's usually when everybody's in, is smiling. But yeah, I honestly, I could see us having a couple months here that could be, a little rougher. But what goes around comes around. That knife cuts both ways. It always has.
let's
They
talk
always
about
will,
another. Yeah, let's talk about another rough chart.
Yeah.
So we got 80-20 turkey, what we're looking at. We're down $72 month over month. I think it's around 530, 458, kind of depending who you're talking to, right? Again, another 14%. So we're back to that similar percentage.
That's an ugly one. But I mean, ultimately, that'll show you that's a big piece of that strength of the dollar too, it plays a big role, and especially with the lira. I mean, people talk about inflation in the US, right? I mean, we've had, some pretty good inflation over here, but if you look at what those guys and what they're facing in Turkey from an inflation standpoint, they're getting creamed.
Yeah.
And I can't blame them. At the end of the day, you're getting the same amount of scrap for a lot more money, and something's got to give,
Yeah. Well, I do think it does feel like, I think, was it yesterday or maybe the day before that, they try to cut, like turkey scrap buyers try to cut pricing. They actually raised the local price, I think around $10, $15 a ton. So that might end. They got some sales off at like a $300 margin or whatever. So I mean, to me, that's a good sign. It feels like there could be some stabilization. We might at least stop the bleeding here for a little bit, but time will tell.
And who knows? Like, I don't think anybody's here to predict the future, other than like maybe a couple of days, to where June's going to be. Yeah. But even then, you're just going to have to make. I think that real operators will operate, and I think whether you're a steel mill or a scrap processor, like right now, these big swings is when you make your hay, right? You make your hay because you're a good operator or you're not, or you're efficient on your melt shop and, your operation side and get material through the system, logistics and on the back end, or it's the same thing on scrap side. If you're a legit operator, then right now you can sit around and complain about shit, or you can go to work and figure out how to make it go,
Yeah. I think you hit the nail on the head. Until we start export tons start moving up the coast in large volumes, it's going to be hard to really turn this ship around.
Yeah, and that deal can change on a dime. We've seen it before, right? I mean, I feel like I've seen this movie before. I feel like I've been down this road, so I get it, and it's not going to happen overnight. China doesn't just turn the light switch on and go, or the dollar doesn't just come crashing down overnight and creating major inflation. At least we hope not. I like there's got to be some let's walk it back down. But then again, I'm if you would have told me a year ago that the dollar would be or even let's say 2 years ago when we were printing significant amounts of money, that the dollar would be as strong as it is today, I would be like, there's no way, right?
Yeah.
I mean,
the reality is we printed a ton of money, but so did everybody else.
Right? And so everybody else got on that bandwagon. So, I don't think a lot of it's changed. I feel like people still view the dollar at this point as still a safe haven currency. And if you're jacking up interest rates, people can, get a little return on their money. Plus, if their currency's getting creamed, then where better to put your money?
Yeah, and that's the reality. That's the harsh reality of, when we during COVID, do we need to print all that money? Yeah. Did we probably avoid a recession, maybe even a depression? Yeah, probably. So did it do its job? Yes, but the intention was probably to help the person on the lower class or the middle class. And the reality is all it did was, if you had assets, they're worth a lot more today.
Yeah.
Incomes have gone up incrementally, right? And so
100%.
The intentions were good, but the reality is we're just not seeing that in the actual market.
Dude, it goes back to the old, and I'm just gonna put this out there, and it is what it is, but I feel like no matter what, and I've heard people say this before, you could start everybody back at zero, right? Put everybody at zero tomorrow. Nobody's got any assets, nobody's got any money, and you put the same group of people out and say, all right, go figure it out. Within reason, within a small margin, the same people are going to have money, and the same people are going to be doing what they do today, right? I mean, And I think that it just comes back down to how you use it, how you spend it, what you do with it. You know, do you live above your means, below your means, whatever that is? And do you buy the right shit at the right time, or do you buy the wrong shit at the wrong time?
Do you buy a tire shredder or not? I don't know.
Well, I gotta have something to do while these prices of scrap are getting, you know, I'm like, I gotta have a project.
I hear you.
So,
I hear you.
Yeah,
Well,
so we'll go shred some tires, you know, clean up Idaho for a while, and you know, just put our, you know, let everybody put their foot on the brake, and we'll just kind of coast it around and see what happens.
Well, I do got one bullish point for you. And I feel like the one we kind of hit on with crude steel production still being fairly flat, right? And then the other one was, if you looked at imports, steel imports, March to April, it's actually down 11.7%, which I was pretty surprised by. So as much as we are on an island and our pricing is obscene compared to the rest of the world on steel, the imports are actually move lower, at least from March to April. So I thought that was fascinating.
And to piggyback on that point, you also have more steel mill capacity coming, right, in the next 2 years. Yeah. So which in the short term and really in the long term, it's a good thing. You know, it's good from a scrap processor standpoint, because that's that many more mills that are going to need fed, you know, and most of it's, you know, scrap consumption, you know, versus say pig iron or whatever. So I feel like that's a good thing. And it's not like that's not going to happen tomorrow or next month, but the next couple of years, it bodes well for the industry. I think it bodes well for, you know, the scrap processor, that's the collector that's out there, you know, accumulating, processing the material and prepping it for the steel mill. So long run, I think that's a good thing, which is going to will maybe put more of a drag on imports, right? I mean, the more you can domestically produce, as long as they get rid of those 232 tariffs, we'll be all right, you know, because then at least give us an option, you know, that makes sense. So,
well, I feel like I've hit you with a lot of bear news, so I do want to leave. I got one last comment. I want to get your thoughts. Okay. And I was listening to a podcast called All In podcast. And so it's a panel of a few billionaire, mostly venture capital investors. One of those guys is really bullish on EV battery materials. Think lithium, you know, cobalt, all those things, right? And though they've taken a beating, just like gold has, just like copper has, just like, you know, I think we've seen like Zorba prices. That's one thing we didn't mention, but that's down 11%. Like if you're selling shredder feed today, you got to think like, the shredders are going to want to increase. They're going to have to make up that mark. They're going to have to make up that loss, right?
Right.
So, but what are your thoughts? I mean, do you feel like some of these base metals, predominantly even the EV metals, do you think at some point I guess, do you feel like we're getting close to the lows on those grades for the year, or do you feel like we still got room to go?
I definitely feel like it's a supply demand thing, right? You have a significant amount of demand. At this stage, people trying to figure out how to make a battery powered car, right? And by make it, I mean produce it at scale. And the amount of lithium, the amount of copper, the amount of aluminum you're going to need to make that really happen, it bodes well for, you know, the recycling industry. Now, the bigger problem I see on the lithium side is, and eventually, you know, we'll figure out how to recycle those batteries. We'll figure out how to extract that material back out and put it back into the value chain, right?
Yeah.
But right now, the issue you have is on the mining side, there's so much red tape, there's so much regulation around, you know, being able to go extract and get that material in its raw form, that you've got a significant demand and whittling supply, or, you know, supply that isn't going to hit for years, right? Just because of the amount of regulation, red tape it actually takes to get through and actually be able to set up a lithium mine. So that's the same for copper. It's the same for any other material, right? That's why I'm so bullish on platinum, palladium, and rhodium. And because ultimately, even if the US goes 40% EV, you still have all these other countries that don't have anywhere near the grid capacity capabilities that we have that still are going to have transport, right?
Yeah.
So they may want to, clean up the CO2 emissions or whatever. They're still going to have internal combustion engines, like whether that's a hydrogen or whether that's gas or diesel or whatever it is. So I'm super bullish on, lithium, but I'm super bullish on platinum, palladium, rhodium, because most of your, like, what is it, 40%, 35, the number, whatever you read, 35, 40% platinum, palladium is coming out of Russia, right? Maybe 25%. The rest of it, the good jag is coming from South Africa in 100-year-old mines that are fucking a mile in the dirt, deep in the earth. I mean, and you have really an unwillingness for anybody to give you a permit to set up another one, right? So that all has to come back out of the recycling food chain somewhere. So bullish, I'm probably more bullish on a company that can figure out how to efficiently and effectively recycle lithium batteries to basically get that material back into the food chain, because I think that's at some point is where it's gonna, you're gonna need that material, right?
Yep.
I mean, I think that's a big one. So I didn't listen to the podcast. I don't know what that guy's viewpoints are, but I truly believe that copper is a big one. I mean, think about what it takes to set up a copper mine. I mean, it has to come out of the recycling chain.
Yeah.
I mean, at least a good portion of it, right? I mean, and it's not like these like second, third world countries are going away from electricity. Like, they need electricity just for their house, let alone a car, right?
Yeah.
They're trying to set up grids and power grids and everything else. So no, I would stand to agree with that.
Yeah, well, that's awesome. Well, I definitely think that's one thing we can all agree on. As you get into the recycling industry, whether it be scrap, non-ferrous, whatever, you can see the shortage or how much is just being wasted, right? Like when you throw a aluminum can in the trash that goes to landfill, that can be recycled, like, and you see it actually being done every day.
Yeah.
You feel like, hey, let's recycle that. Like, there's a real passion there. And until we educate really especially America, right? We're so bad compared to some of the other countries on recycling percentages. So
I talked to your point, Chad. I did a podcast yesterday with the guy, Nigel Dove, and Nigel owns Vortex D Pollution, right? He came from the UK.
Okay.
And ended up, he built his business out of Denver, but builds basically oil draining stands and everything else for basically everything car processing. So whether it's pulling the motor, pulling the wire harness, draining the oil, gas, cutting the converter, I mean, you name it, right? That's kind of his sweet spot. He's built himself a pretty damn good business. But he was saying that a lot of the regulation around what he builds from the UK came out of necessity, right? They just don't have space. They don't have places you can go dig a hole and just bury shit, right? So the government kind of came in and said, all right, we need to, they just basically regulated it into effect and said, there's no more, like, you're not burying the shit. Like, you got to figure out how to recycle it. And he goes, the ingenuity and everything that came out of that, because it forced their hand. And I'm not big on government, forcing your hand to do anything. So don't get it twisted. But the reason that happened was because they didn't have a place to put it. They didn't have a Montana, a Wyoming, and Idaho, big hole out in the middle where they can just just keep pushing it in.
Put it in there. It's all good.
Yeah, it wasn't an option. So long story short, like, you're 100% correct. Like, at some point there's that passion that's going to be, it's there. People are starting to realize, and steel for that matter, right? I mean, recycled steel, the amount of emissions compared to, melting pig iron or whatever, like, I mean, it's significantly different on that front, plus more efficient, right? From a mini mill standpoint versus a big blast furnace.
Yeah.
So, I mean, it's all those factors that make me bullish on the industry as a whole. But there is always going to be certain commodities at certain times that I feel like have got, potentially a strong path forward versus, say, you know, something like iron and steel is not as sexy as lithium right now, or, you know, like some of those like rare earth metals, right?
Well, this is why everybody in the scrap business should be listening to this podcast. We just put a whole lot of bearishness on this whole conversation, but you got Brett's motivation about the industry, about being positive on battery metals. This is good. I love it.
We're trying, man. We try. I mean, at the end of the day, you can always look at the glass if it's half full or half empty. You got to make a choice in life.
We're not just telling you about markets here. We're selling hope.
Yeah,
hope.
Exactly. Hopium, stop on by. I'll pump the tank up for you and we'll keep you moving.
You got Hopper. I love it. Well, thank you so much for your time today.
Hey, man, I appreciate you. And Bulls versus Bears isn't always necessarily us talking shit to each other. Sometimes we make each other's points. But at the end of the day, hopefully the end game really is just to give you a little bit of information that what two different sides are seeing, and then let you make the decision on however you want to do it.
I love it.
All right, man, I'm going to stop this.